Hello, everybody. Thank you for joining us today. We are honored to be sitting down with Crypto Shark from Chartex at chartex.pro. Chartex is a leading provider of full candlestick charting for markets on Uniswap, the largest decentralized exchange running on the Ethereum network. Thank you so much for joining us today, Mr. Shark.
Thank you so much for having me. Very excited to be talking to you.
Could you please explain for our listeners the significance of Uniswap, possibly starting with what Uniswap is?
Uniswap has kind of changed up the game in terms of the ability to trade for individuals. When crypto first emerged, there were a handful of centralized exchanges. So these are exchanges run by kind of companies and entities. And their role in this was to provide a trading venue which would allow kind of both sides of the trade to participate. So kind of talking about trading trading concepts, you have makers and takers. Makers and takers sit on the opposing sides of the trade, so that there is always someone that is kind of matching your order. So if you want to sell, then someone must be able to buy. With regulation over time, it's become more difficult for individuals in certain jurisdictions to trade. Exchanges have obligations to report to tax authorities, for example, on your activities if they are serving kind of regulated individuals. And so Uniswap is kind of the first, what I would consider to be mainstream and very user-friendly decentralized exchange. So a decentralized exchange means that there is no central entity that is in control. You could kind of say that Uniswap, as developers of the product, control the platform, but to an extent, even if the platform itself were to be taken away through some kind of regulatory action, the underlying smart contracts exist on the Ethereum blockchain and they cannot be stopped. So what that means is that traders are no longer handing over passports, driver's licenses, proof of addresses, and things like that to exchanges. They are simply connecting their MetaMask or kind of other compatible wallet, and the only thing that is broadcast on chain is just a blockchain transaction. So there's no personal details. It makes for a very private experience, and the user experience itself is actually very, very good. Some users find it quite confusing, for example, to see kind of all the different buttons and text inputs and the difference in types of orders, so kind of limit orders and market orders and stop buys and stop sells. With Uniswap, you simply have an input and an output. So you're going to place one Ethereum in, and it's going to tell you how much of the opposing token is going to be coming out. And that really is the extent of it. So Uniswap is kind of, I think, the first decentralized exchange to really hit mainstream adoption. It was kind of realized that there was an alternative way for people to trade, and that it wasn't always going to be about those centralized exchanges anymore. Uniswap is also quite different in the sense that they don't operate an order book. So they have a model called an automated market maker. And essentially there is a pool of liquidity where there are tokens for both sides of the trade sat in a pool, always in balance. And you are simply adding something in and taking something out. So you're not reliant on matching an order.
At what point did you think that what Uniswap needed were the candlestick focused functionality of Chartex, and how did that idea develop?
So if you're a technical trader, you're going to be kind of consuming swathes of data about what's going on in the market. You're going to be looking at orders and order sizes, and then you're going to be looking at candlesticks, which are the visual representation of kind of the lifeblood of the market. So candles will show the session highs, lows, open and close prices. And from that, you can kind of visually interpret certain types of trading patterns and behaviors. And then you can tailor your own approach to trading around that. Now with Uniswap, where it is just simply a selection of executed transactions on chain, there wasn't previously an approach to kind of visualize the activity of the market in the same way that you might do on cryptocurrency centralized exchanges. But equally, if you're trading equities or commodities, kind of candlesticks are a staple part of individuals' trading strategies. And then beyond that, you then have technical indicators that sit on top of those kind of candlesticks, which are essentially summaries of what's gone on in a given time period. And then you can start to look at things like momentum, and you can look at sellers or buyers becoming exhausted based on proven mathematical calculations. So you'd look at things like relative strength, stochastic RSI. Those are probably two of the most commonly experienced indicators. There are literally hundreds that have kind of come out over time that traders will make part of their individual strategy, and that will help them to determine their entries and exits. And so what we've kind of built is an experience that is very similar to that which you may have been used to if you'd ever traded on the legacy markets, or if you were already trading on centralized exchanges.
What have you found to be the most reliable indicator? And what functionality on Chartex do you find the users have found most useful?
So trading indicators are very subjective. It all depends on what your overall strategy is. Some people will look purely at visual kind of formations on candlesticks. Some will look at, personally, RSI being oversold, for example, is generally quite a good indicator that the market could be turning, but that would only work on very liquid and fast-moving markets. So Uniswap and kind of decentralized exchanges operate at a much slower pace, purely because they're limited by the capacity of the blockchain itself. So Ethereum can only do a certain amount of transactions per second, which means that you're not going to be seeing billions of dollars moving in either direction in a matter of minutes like you might do on those centralized exchanges. And in terms of the features that I think our users most benefit from, being able to kind of interact with those trades as they are coming in. So we have the ability for people to kind of live stream trades to the side of the chart, which will show the user's address. It will show the kind of order size and quantity. And that goes beyond the information that you would be able to see on a centralized exchange, because the centralized exchanges would never provide you information about the user at the other side of the trade. So because the transaction is on chain, you can see the individual's address, and you can start to understand their own individual trading strategies. And that gives you a distinct advantage, because you can try and predict what an individual is going to be doing on the market rather than the whole market itself.
Mr. Shark, I'm curious, what led you down this path towards what is quickly becoming a popular crypto trading tool? Did you have interest in trading before you discovered crypto? Is trading your passion in crypto?
My passion really is data, actually. I found crypto by accident in early 2017, where I had kind of a gaming machine, and I'd heard some talk of people using their gaming machines with their graphics cards to mine cryptocurrency. And so my kind of entry into the space was mining Ethereum on my gaming machine, which over the course of a few months then became a few more graphics cards, to the point where I had been able to mine a small amount of Ethereum, and that was kind of the gateway into cryptocurrencies themselves. And in realizing that kind of the process of turning that Ethereum into money of some kind meant that I would need an exchange, kind of quickly introduced me to trading concepts. So I certainly wouldn't consider myself a good trader, but I can certainly take a look at data and absorb the data and work out what's going on from that. I've always kind of had the mindset that if I find something that doesn't quite sit right, or if I have an idea for something that might improve individual situations, then I'm a tinkerer by nature. I like to write software, and so kind of evenings and weekends I'd slowly built the individual components of what would become Chartex in the long run.
What about data in context of crypto excites you the most?
I think when it comes to kind of decentralized exchanges, which was what really kind of set my interests alight, it's the fact that you have so much transparency about what's going on. So, I mentioned earlier that you could see an individual trade coming through. You'd be able to see the address of that trade, and you would be able to then review trades in the past to kind of predict what's going on. But because blockchain is a kind of a transparent ledger, you can also then dive into those addresses. You can see what other balances they hold, for example, or just how much of a given token they hold, and you can use that to assess the impact of their trading actions. And it was kind of that interdependency and interlinking of individual traders that kind of really sparked my interest, because you could then kind of model behaviors and look a little bit deeper.
In terms of data analysis, what data on Chartex do you find most interesting or even unique?
I suppose that one of the most interesting things that I'm seeing recently is the extent of automated trading activity. So one of the things that centralized exchanges have always been prone to, but you couldn't necessarily prove, was the concept of a market maker, which operates in a slightly different fashion to that you might experience on traditional markets. On traditional markets, their sole role is to maintain an orderly market, keep spreads tight. They don't define direction or anything like that. You'll often see on social media in the crypto space particularly that people start to point the finger at the market maker for influencing a market in a given direction. And what you can see on Uniswap is you can identify those market makers. You can identify them by the trade volume and the frequency of trades. As I've mentioned before, because you can see what they're doing, you can use that to kind of build a picture of what they may do in the future. And that's the bit that is kind of missing in the kind of the traditional and centralized exchange worlds that can really help give you an edge if you can get yourself in front of the activity that you think might be coming up.
Where do you see crypto exchanges evolving, especially in the context of decentralized exchanges? Will they render centralized exchanges useless, or will they prove so powerful that the vast majority of, say, intermediate and expert crypto enthusiasts choose them over centralized exchanges?
I think all the while that dollar is king and that kind of hard currency is the thing that you're going to be going to the shop and buying your groceries with or paying your bills with, there will be a heavy reliance on those centralized exchanges, because those are the ones that are regulated and those are the ones that can put money in your bank account. I think, though, that decentralized exchanges will continue to grow as long as the technology follows. Ethereum is going through a time of kind of unprecedented demand, and that is making it very expensive to transact and very slow at times. So if Ethereum cannot rise to that kind of challenge, which, long term, there are aspirations for it with Ethereum 2.0, and the miners to an extent have some control over the capacity of the network. One of two things will happen is that people will start to move back towards centralized exchanges, or they will realize that Ethereum is not the only chain that has become a trading venue and start to explore things like Binance Smart Chain, which is hosting a number of kind of, I'll call them Ethereum clones, but they all have their own kind of spin on the value add. So you're not just trading over on Binance Smart Chain, you are farming assets as well in a slightly different way. And then you've got emerging chains such as Avalanche, for example. So Avalanche recently had their first kind of swap exchange launch on there, and a few $1 million of assets have been moved across onto that chain as well.
You tweeted from the Chartex Pro account today that Sushi token is leading the volume rankings for ETH swap markets, excluding ETH to stables and WBTC to stables, with Tornado Cash hot on its heels. What's the significance of that?
So Sushi token leading the volume is quite interesting from the perspective that when people think of decentralized exchanges, the household name is generally Uniswap. Sushi token, however, is traded on a decentralized exchange called SushiSwap, which has its roots in Uniswap as a kind of a code fork. But SushiSwap has again kind of taken the concept and evolved it into something very much of its own. It has governance features, so token holders have a say in what's going on over there. And I think a lot of people are not necessarily aware that there are other trading venues. So that's why SushiSwap is most interesting. Tornado Cash is interesting because it's a new listing. So the token became transferable yesterday evening and has already kind of put significant volume on chain. Tornado Cash is a kind of privacy-centric product where you can move Ethereum between addresses without necessarily leaving a footprint. Probably not necessarily appropriate for this conversation, as we're kind of talking about the trading side of things, but Tornado Cash is kind of a useful part of the Ethereum and kind of, I suppose, even blockchain concepts. Being able to transact privately is something that I think is going to become much more important in the future.
When you analyze Uniswap and SushiSwap, what are some of the main differences and similarities? Do you envision a day in which SushiSwap becomes the household name in decentralized marketplaces?
I think there's a very real possibility. I think Uniswap had the kind of the early advantage. They have the brand recognition, but looking at the volume that is starting to be transacted on SushiSwap, that is kind of the first clue that adoption is coming to their platform. But they are probably much faster, in my opinion, at evolving. So SushiSwap was one of the first kind of platforms to support yield farming, which is the kind of the process of staking your assets and rendering yield from things that would otherwise be idle. And they are kind of moving very, very fast at the moment. So I would be quite happy to see them take more market share.
What are some of the biggest misunderstandings when it comes to these exchanges such as Uniswap and SushiSwap? And do you anticipate that throughout the course of 2021 that they will play a increasingly or swiftly growing role in crypto generally? So, for instance, I guess if we had to compare them with the greater DeFi space, which in my estimation was one of the quickest growing and quickest adopted phenomenons in the history of crypto, certainly far more than NFTs. From that lens, how do you see something like Uniswap and or SushiSwap evolving?
So I don't think there would be DeFi in the way that there is without these swap platforms to start with. So I think they were very much the catalyst that ignited these possibilities. I think that they are going to continue to be kind of central to people being able to get in and out of these various DeFi products. Because the thing about these DeFi products is, in general, you're either taking a token and you're staking it, and you are receiving some kind of award for it, whether that be participating in governance, whether it be that your funds are put to work in some kind of decentralized fund, or whether you are lending assets for other on-chain activity, such as one of the more recent use cases, for example, is providing a pool of assets for trading bots to perform a thing called arbitrage, or arbitrage, depends on how you pronounce that, which is the idea that you can make profit from markets trading the same asset at slightly different prices. And so you can kind of capture that difference. But equally, the concept of miner extractable value, or MEV, is something quite new as well, which is the idea that you could potentially cooperate with Ethereum miners to reorganize transactions within a block so that there is some value that can be transacted from that. So kind of to explain that a little bit further, trades are not executed sequentially necessarily when it comes to transaction on blockchain. What's going to happen is that a bunch of trades are bundled into a block. Some will have higher and lower gas prices, which will influence the order that they're going to be processed. But where all other things are equal, there's an opportunity to decide in exactly which order those trades would execute. And if you happen to be one of those participants, you could influence the miners in some way to put your transaction towards the front of the list or towards the end. And therefore, you may have your order filled at a higher or lower price, dependent on how you wanted to benefit from that. And so that's something that's quite new and exciting, because the people that benefit from that are not just the miners, but equally the people that are providing the liquidity to those miners. So there's a product called Keep a DAO, for example, which I think is kind of $40 or $50 million in each of their liquidity pools, which they are providing to the miners for that exact purpose. And so those are the things that are exciting, but equally kind of frustrating for traders, because they are blind to the activity of kind of the miners and the bots. And I suppose that's one of the bigger downsides to the DeFi space, is that you don't necessarily have a guarantee that your order is going to fill at the price that you wanted it to or expected it to, because there's no real concept of an order book. And so if you're looking for absolute guarantees, you want to sell your Ethereum for exactly $1,700, for example, then that is one of the use cases that would still push you back to a centralized exchange.
What's most surprising, ironic, novel, or controversial in your estimation about these DeFi technologies that are really in a nascent or incipient stage?
I think the sheer amount of experimentation that is going on, where millions of dollars of capital are at risk, is one of the things that's most surprising. But then there are very few, in my opinion, kind of traditional value investors in crypto that are only out for a 1 or 2% return. So that they kind of understand to an extent that what they're doing is risky, but the rewards are quite substantial compared to other investment vehicles.
What unique insights into these markets has building Chartex Pro given you?
So interestingly, there was a product called Warp Finance, which was unfortunately exploited, and kind of their users lost a significant amount of money. And the reason that happened is that the exploiter destabilized the price of one of the underlying assets that was used to calculate kind of liquidations, because it was a borrowing kind of protocol, and users were kind of providing their assets to be borrowed. And the exploit in question involved taking DAI, which was a stable coin, which is meant to be a kind of a synthetic representation of a dollar. And they traded it in such volume that it destabilized the price. It effectively meant that the net value of Ethereum headed towards zero. And that in itself, because of an implementation of their kind of pricing calculations with relation to liquidations, meant that it triggered mass liquidations. And the person that exploited that particular attack vector was the same person that took the benefits of the liquidation. Because where I spoke about minor extractable value in terms of arbitrage, there is also a very healthy market for kind of keepers. They're described as keepers because they're performing jobs on chain. And one of the keepers' roles is to liquidate positions when they have become over leveraged. And so building Chartex, we actually kind of saw that play out in real time, because we saw the value of DAI crash to near zero. It actually had knock-on effects, because a lot of products, and not just Warp Finance, calculate their kind of asset prices by using the base price of Ethereum to work out what their individual asset was. And so we had a short-term kind of flash crash that didn't really exist, because all of the calculated USD prices were influenced by the fact that the kind of the peg price of DAI had destabilized away from $1.
What effect did that have?
So kind of the short term was that millions of dollars were lost in liquidations that the exploiter was able to kind of get away with. Midterm, it means that these DeFi products are going to be thinking a lot harder about the underlying mechanics of their particular product and how it interacts. Our immediate kind of knock-on effect was that our charts were affected by this, because we had assets that were effectively showing that they'd gone to zero, because the underlying asset that it was charted against had technically gone to zero for that split second. And so that in itself caused a little bit of panic across the market, because people had thought that their own positions were at risk too.
How does Chartex's approach differentiate itself from other leading data aggregators or tools?
Our users are our lifeblood, and we're building a product for them. So if someone comes to us and says, hey, this would be a great idea, we don't just pay them lip service and stick to our kind of fixed aspirations for the platform. We give it a long hard think about how that might be beneficial to traders, and we will turn that into kind of working products or features. We're able to iterate quickly because we are so small, which means we can launch things a lot sooner, but still be confident in its capability. And I see our agility as probably one of our biggest strengths. Scaling to support the kind of the new audiences that are, I suppose, anticipated to be coming into the space, and we're already seeing kind of the early signs of new retail traders is going to be one of our biggest challenges. But I'm absolutely confident that we're going to rise to that challenge.
What is a suggestion that was made by the Chartex community that you found unique?
So I suppose one of the probably the most useful suggestions we had from one of our users was actually in terms of which information would be most relevant. So on Chartex, you don't just have the trades, you have the ability to look at the underlying trades and where they're coming from and where they're going to. And one of the users had suggested that if you were to kind of hover over a trade, it would be great if you had the ability to see other trades that were kind of in close proximity that were carried out by the same user. The benefit of that was well explained before we went ahead and built that, but that also meant that you were able to, I talk about patterns. Patterns happen a lot in data, and they can be useful or they can throw you off the scent. But this is one of those patterns that, again, you were able to kind of start second guessing what was going to happen in the market. And from a kind of protecting our user perspective, one of the bigger downsides to DeFi is the fact that anybody has the ability to create a token, and anybody has the ability to list it on a decentralized exchange, because at the end of the day, it is just a smart contract that gets deployed. And the problem with that is that not everyone is doing it in an ethical manner for, and creating a product or a token that's going to be serving purpose. Some people are creating malicious tokens where the sole purpose is to get a handful of people to buy it, and then for the token owner to sell the proceeds of their own holdings and walk away. And so the ability to be able to see those addresses and be able to see the patterns, one of the traits of these kind of malicious types of markets is that you will see just one or two addresses trading, and they will be essentially creating fake volume. And being able to see that the only market participants are one or two people will give people the means to kind of raise a red flag that something does not seem right here, because in an orderly and normal market, you would have hundreds, if not thousands, of participants.
Could you see that being advantageous for law enforcement?
Yeah, most definitely. I guess it's kind of a double-edged sword, because I don't know, to what involvement law enforcement would have, because they don't have individuals' data or information. They just have some wallets on chain. So if you can't tie those wallets to people, then you don't know which jurisdiction of law enforcement would need to get involved. And law enforcement would still need to prove that an individual was the owner of said wallet before they could actually take any action against them. Centralized exchanges, however, would pay a little bit more attention to that information, because by their nature being centralized, they have the ability to restrict individual addresses from being able to deposit or withdraw, for example. And so proceeds of DeFi exploits, for example, are often stopped at exchanges. And so exchanges could well, or users that have been affected could well use this information to flag known bad addresses that are, doing potentially criminal activity. And exchanges could use that in their decision-making process as to whether or not they're going to allow that deposit to proceed, for example.
When you approach the data in the markets, especially after having built Chartex, what do you look at first?
I would look at a chart second, and I would look at the individual trades first. I would look at the trades to see how many different participants there are in that particular market. I would look at how frequent trades are going through. I would look at the kind of the size of the trades. I would equally look at how liquid the market is. So with a centralized exchange, you would have an order book, and you would see, what assets are available within a certain percentage point of the current price. On automated market maker models such as Uniswap and SushiSwap, you have the liquidity pool, and that forms the basis of all trading activity. So a more liquid market is in theory less volatile, because in order to move the price by degrees of magnitude, you would have to be trading in much higher volumes than on low liquidity markets, which you would often find with the kind of smaller, more niche products that are not trading in such volume. A one Ethereum trade on a market with $100,000 worth of liquidity could actually move it a few percentage points. And so those bits of information are kind of key before I would make any decision as to whether or not that was a market I was willing to trade.
One of my favorite indicators, and not that I have the data to support its efficacy in informing a trading strategy, would be social media. Do you have any comments on that?
I think social media is absolutely relevant. It's kind of the advent of big data and the ability to consume kind of sentiment and read sentiment from social media posts has made it very, very interesting. There are platforms such as Luna Crush that their sole purpose is social listening on crypto communities, and they're identifying influencers, they're identifying kind of whether the number of social media posts correlates in any kind of way to predict future price. So it's a great new tool to have in your arsenal to decide whether an asset is something that you're going to be wanting to be traded. But at the same time, it has its downsides, because the awareness of the existence of said tools and the fact that people may be using that to inform their decisions means that it can also be manipulated. So, that there's been talk that elections have been kind of unfairly influenced through kind of bot armies, for example, that are trying to paint narratives in certain directions. And I think that absolutely exists in financial markets as well, that you'll have people that have the capability to automate social media posts and engagement, use that to their own advantage to try and sway kind of opinion and sentiment in their favor.
Without downplaying the importance of technical analysis in trading or analyzing markets, I believe that human action in and of itself is largely underestimated when it comes to the data in crypto markets, or perhaps all markets, and particularly trading. Honing in on technical analysis in and of itself, what have you learned about it in the building of Chartex?
So one of the things that I really wanted to prove or disprove was whether or not technical analysis worked on decentralized markets. And it provided the kind of the perfect test case, because there was previously no means to produce charts for these markets, and therefore no way to apply those technical indicators and strategies to them. But once we kind of captured all of the data we needed to render the candles that were required to produce the charts, it was quite surprising to see that on the more liquid markets, even in the absence of those kind of visual cues, that there was kind of rational behavior. Things like fib levels, which are kind of mathematical calculations as to how far a move in a given direction could go, for example, before it may be exhausted. And you would find that in some examples, fib levels were respected. You would find that kind of harmonic trading patterns such as triangles, wedges, and things like that, they would form on these charts, because I think that kind of happens in a somewhat natural manner as volume and kind of trades in a given direction start to exhaust for kind of fundamental reasons or something like that. And you would find that these wedges would break up and reverse the market in ways that you would normally see on very liquid markets, and be able to kind of draw that out and see for yourself. But nobody had this information available to them. So that was kind of quite surprising.
I mean, that's fascinating to me. Can you please continue in your pursuit of whether or not decentralized marketplaces are a reliable source for technical analysis, or if technical analysis worked on decentralized exchanges?
Yeah, I think technical analysis is definitely working on more liquid markets. So these are markets where you have lots of participants and there's a reasonable amount of volume. It doesn't work so well on quieter markets because the trading activity is a lot more unpredictable and can be a lot more volatile because these markets generally have less liquidity. So when you start to pair those technical indicators with social media sentiment analysis, as you've mentioned, and the means to start to second guess what the market participants may or may not be planning or doing, because you can see individual trades and you can see individual wallets and you can see their movements in and out, I think technical analysis becomes even more relevant because you have additional data sources to inform those decisions and kind of use within your trading strategy that you wouldn't be able to do elsewhere.
For those who are, let's just say, expert at crypto, they've studied the markets, they've studied the technology, they've been involved in the space for a very long time, but who have not traded and are interested in taking a very conservative approach to it, perhaps carving out a small portion of their overall holdings to begin day trading or speculating. What would you recommend they first begin looking at? And again, I just want to emphasize that this is somebody who's expert in these markets, who knows their way around them.
So this is someone that may have kind of traded legacy markets or commodities, and they're kind of finding their way into cryptocurrencies for the first time, do you mean?
I would say no. I would say somebody who's expert in crypto, but has not traded ever.
Right, okay. So I suppose if they've already got a good handle on whether a project is fundamentally viable, and that's kind of where their expertise has come from, then I suppose reading up on sites such as, I suppose Baby Pips is probably one of the sites that most people coming into the trading world will be recommended at some point. That kind of gives you the introduction that you need to the charts, the indicators, what the telltale signs are going to be that markets are going to reverse, how to kind of establish what good entries and exits are, for example. That was the source of information that I was very first told. And I would say that gave me a good introduction to trading and trading concepts. I would probably recommend that they don't start in the world of DeFi and they start on more liquid markets and start, kind of trading things like Bitcoin and Ethereum, because yes, they are volatile, but DeFi for the most part is still in that stage where it's very experimental. For every 100% gain you get on a given trade, there's just as high a probability that you pick something that gets exploited, or the developers run away because they can, because they're just an anonymous address somewhere, for example. So I think Baby Pips is a good start. Start watching those strong technical traders and their YouTube content. Subscribe to newsletters. Certainly don't dive in until you're absolutely ready, and manage your risk.
What are some of those resources, whether that be technical traders on YouTube or newsletters, that you like?
I think one of the first Twitter accounts I came across was Cryptocred. He produces a wide variety of content that covers, I would say, probably right the way from beginners through to advanced traders. And that's something that's kind of always stuck with me. I also follow a lot of accounts that are far more reckless, and I use that as the kind of the basis for how not to trade. They're going to hit multiples, but they're also going to take some big losses along the way. And the traders are quite gracious about it in sharing in their wins and their losses. And that's something that I really do respect.
After mastering the beginner level of trading, where would you recommend somebody go for intermediate steps and then expert steps. And then how does Chartex play a role in all of that?
So I wouldn't consider myself the greatest of traders. And I wouldn't be all that comfortable with recommending people that I would consider, kind of for those next steps up, because I'm very much there myself, that is the next level of education that I need. Where I feel that Chartex would fit in is for, when people are ready to take a kind of sidestep away from those centralized exchanges and start to dabble in the world of DeFi. Because it is exciting. There's, high adrenaline with new listings and working out if those listings are going to do well. So I think there's always going to be a place for Chartex, particularly with things like being able to set alerts. So, you found an asset that you think is going to do well. You think it's probably a little bit overpriced and you want to wait for, a small correction or change in the market. Then the ability to set alerts and then just go away and come back and wait. Patience pays. And I think that's one of the things that will kind of get drummed into you at all levels of trading, is that trades should not be rushed. You wait for those entries, and being able to set yourself with alerts means that you don't have to be waiting, as in sat at the screen staring at the chart. And I think that's one of the bits that I think is probably most exciting.
So keeping in mind that you consider yourself more at the beginner level of trading, I think that you might feel more confident with data. Now, when it comes to looking at data beyond the beginner level, what would you recommend as interesting? What's your favorite more than simple data, or what complex data do you enjoy looking at the most?
So there are times where nothing can beat taking a large data set, throwing it into Excel and doing pivot tables, for example. Kind of summarizing and aggregating the activity on a market and using that as the basis to help you work out who are the buyers, who are the sellers. Trying to kind of get a handle on that, I think, is a good place to start. If you have kind of experience in data analysis or software, then you're probably already going to have the tools of the trade available to you. Some of the more interesting algorithmic traders, for example, they are kind of heavyweight developers using languages such as Python, because Python is very strong at kind of big data and numerical analysis. There's a handful of people I know using R as a software language, for example, which is another statistical data platform. It all depends on where you are coming from in your own kind of technical ability. If you have kind of a data science or computer science background, I think you are probably advantaged in your capability to take this data and transform it into things that are useful.
In regards to breaking news, whether that be the aforementioned Sushi Swap volume or Tornado Cash or otherwise, what do you find most fascinating today or this week?
I think this week, nothing can really eclipse the news that Elon Musk and Tesla had taken a $1.5 billion position in Bitcoin. For those that have, kind of been following the crypto space for a number of years, it's kind of been recognized that crypto hadn't really been taken seriously. So whilst Tesla is not the first significant company to have announced that they've taken a position in cryptocurrency, I don't think Michael Saylor and MicroStrategy are necessarily well enough known globally to have had the degree of effect that Tesla legitimizing cryptocurrency is going to have had. And so for me, I think for some time it's going to take something very significant to eclipse that.
Do you think that has been priced into the market at this point? Do you believe it was priced in at an earlier point? For instance, I can't help but notice that Elon Musk posted in his Twitter profile #Bitcoin a couple weeks ago. I'm wondering, perhaps that should have been taken as an indicator by at least me that something was brewing. Or do you think that we saw? Go ahead.
one of the more interesting things to have come out today is a screenshot from Reddit 47 days ago, I think it was, from an anonymous account that said, "Hey, I work for Tesla. You're never going to believe this, but we built a bot to start buying Bitcoin." And this was a brand new account, had nothing really to back it up with any kind of credibility. People were already talking because Elon Musk has not been a stranger to the cryptocurrency space. He's just never really taken a position either side to say that it's legitimate or anything other than a piece of fun. And so that, for me, if I'd seen that particular Reddit post, I may well have paid a bit more attention, because I'd already seen that certain large entities were starting to expand into the crypto space.
What's next for Chartex?
We launched our test platform a couple of weeks ago. On that test platform, we have expanded beyond just Uniswap and just Binance Smart Chain. So that has opened up a few $100 million a day in daily volume of additional trading venues to start exploring charts for. SushiSwap was not the only exchange that we added support for. There was a number of others that are they're relevant, but they're not necessarily worthy of note, in the sense that SushiSwap is by far the most recognized, but there are probably 20 more additional exchanges that we added onto our platform as well. We have a small number of users just kind of battle testing that to make sure that that's ready to go mainstream, and that's going to open up quite widely all of these additional markets. And then beyond that, as we've kind of discussed throughout this conversation, I've got a passion for data, and one of the next things that we're going to be launching is very much data centric, and it's going to be providing high level overviews of what's going on in the DeFi space. So I'll deliberately keep it kind of quite vague at this point, because we're still firming up some of the details. But suffice to say that Chartex will be expanding beyond charting is probably the best way to describe it, and providing a lot more data and insights into the markets in a form that people are going to be using and digesting is our kind of next priority.
47 days ago, approximately, the Bitcoin price stood at between $23,000 and $25,000. So it already, of course, run quite a bit by the time that Reddit post appeared. Any thoughts on that?
I think there was probably no real way to accumulate $1.5 billion worth of Bitcoin without there already being some ripples in the market. And I think Michael Saylor had already kind of set those wheels in motion. He was, I think, MicroStrategy announced that they'd started to buy Bitcoin. I think it might have been about $17,000 or $18,000. So Elon bought his bags, in essence. If you want to talk in real colloquial crypto terms, it's all about who is going to be the person left holding the bag. Michael Saylor was first, Elon's next, and I'm really excited to see who's going to be coming to follow that. But just looking at kind of the grayscale trusts, which is one of the main routes for institutions to get exposure to digital assets, they were hotting up a long time before Michael Saylor had even announced, with MicroStrategy coming on board. So I'll admit that this run has taken me by surprise at how far it's gone, and it's quite exciting in that perspective. I don't know where it's stopping.
I have a working hypothesis, since we're on the topic of Elon Musk, that Dogecoin will actually be the blockchain-based technology that brings crypto to the masses. When I look at Google Trends Search, which I actually think is a pretty useful tool for how simple it is and broad, you see that Dogecoin actually in recent months, let's say precisely around January of this year, January 10th through the 16th, just after that date, actually, let's put it at January 24th to the 30th. Dogecoin actually surpasses both Bitcoin and Ethereum in terms of search volume. What are your thoughts about that snippet of data? Is it an outlier, or does it betoken something new in these markets?
I think it's entirely relevant, to be honest. The thing about Dogecoin is it's it's fun. It's almost a mockery of itself in the sense that, you know, its poster child is a Shiba Inu dog. Some of the memes that are going around and the kind of the way that it's phrased is that it's not something that's ever taken itself too seriously. But at the same time, it does have utility and purpose as a digital asset. The problem I see with Dogecoin, and if you look at kind of its historical market performance, is that it gets used a lot for pump and dump cycles. So it never sustains, or at least it hasn't in the past ever sustained its kind of place as an appreciating asset. It's something that will, you know, kind of once or twice a year catch everyone by surprise. It will move by 50 or 70%, and then it will go back into its slumber as it sells off. And for all the great things that it has done recently in terms of bringing new eyes to the digital space, I think it's done a lot of damage as well, the same way that GameStop has, because it hit 8 cents, it dropped down to 4, I think it was. And anyone that had kind of bought the top of that particular one would have really been sweating as to whether or not this was a good investment. And then there was another tweet by Elon Musk, and it went back up to 7, and then it tailed back down again. And then there was another tweet by Elon Musk, and it moved again. And that's not healthy. Quite frankly, that's not healthy for that particular type of asset. But I 100% agree that it has definitely served its purpose at bringing a lot of new eyes into this space. You look at TikTok, and there's people on TikTok talking about it. There's memes that are going beyond the usual kind of channels for crypto related memes. So it's not just 4chan and crypto Twitter. You're seeing it hit kind of more mainstream things. People were speculating as to whether or not it would be featured in the Super Bowl, for example, which I found most amusing.
I have 3 kind of working hypotheses when it comes to Elon and Dogecoin. The first one being, as he stated, he's joking, he's making jokes. The second one being that he's pumping the coin and he intends to make more money than the looming fines that would come along with doing that. And the third being that he actually had the revelation first, that in fact the